This is David Patrick, Fitzstock Charts, a market video update for May 2019, and we are in a 3-day downtrend. What's our number one priority in downtrends? Preservation of capital. No trends, preservation of year-to-date gains. We just went from preserving our gains to preserving our capital. We've identified since 2013 with the service, we trade uptrends. Is there any reason to be aggressive right now? Zero reason. Zero reasons. Now, we know that we've been using our historical chart pattern comparison to 1998 for the last few months, and we've hit it out of the park. We also know that pattern will eventually diverge. Is it going to diverge soon? Is it going to diverge later? We don't know. If it doesn't diverge soon, then yes, this is a buying opportunity to add long market exposure using our 5-minute rules of engagement. You still have to give it some wiggle room because you don't know where to put stops. You can put stops at previous day's lows or pivotal areas on the charts. If you're using options, don't risk more than 50%. I added some spider calls today. I scaled. I know what my risk is. I'm risking $2. $2. That's nothing considering how high stacked we are with profits on the year. We had an 18 or 22-day uptrend, a 15-day uptrend, a 40-day uptrend. We are insanely high stacked profits. So please embrace, enjoy this pullback. We don't know how long it is going to last. But if you define your risk, I hope you're not over trading, okay? But if you are buying pullback with the index, you have to understand you don't have rules to engage on the daily. So it means you're probably going to take heat on the trade, which means it's probably going to go against you in a short term because we're in a downtrend. So understand your weekly is still bullish. The historical chart pattern is still bullish, but you don't have rules to engage. So if you're taking spider calls or SPXL or something long based on 5-minute rules of engagement, I suggest scaling, reducing the size, paying yourself, and then giving it some wiggle room, previous day's low. That's my suggestion if you're adding on the dips. And yes, you might get stopped. You might get stopped. But that's what counter trend trading is all about. You're going to get stopped because you're fighting the trend on the daily. And when we have conflicting indicators like this, bullish weekly, bearish daily, bullish historic chart pattern comparison, and we're in the week before options expire, historically the market hits pivotal lows. Eventually that thesis or that trend will stop. But we've been sticking with that trend. It's been paying. So I do think that there's going to be some sort of pivotal lows put in this week, and we're going to rally off them. I don't know if we'll rally to new highs or rally back an uptrend, but you should see some sort of rally. Does it have to happen? No, and that's why you defined your risk. Okay, so we're going to look at 1998, historical chart pattern comparison, bounce at the 50 SMA support. We know our number one priority is. I said things were going to get tougher. I mean, I said that actually for a while, and I was wrong because it kept getting easier and easier and easier. And you know, when you get to this complacency point where it just seems like you can't go wrong in a market, you know eventually you get to that point and things become more difficult. What do we do when things become more difficult? We pull back the throttle. We sit on our hands. We put our stops in on our swing long positions that we have great cost basis on. If we get stopped, that's part of the game. I got stopped on UDOT. I got stopped on an ES day trade that I tried to turn into a swing at 29.01, right? And maybe I get stopped on these spider calls risking $2. That's part of trading. But understanding that when we're in an uptrend, we have higher odds. We're in a downtrend right now. So you have to expect to get stopped if you're counter trend trading, unless you're giving it some wiggle room. Okay, the ESFL 178 different stocks have engaged. 2 no scales, 19 losers, 157 winners, 88% win rate. It's crazy. Why are you being aggressive? I mean, I'm here to help. You all know that. And by all means, if you have questions, shoot me an email. I say that all the time. Some of the emails I get shock me a little bit because I don't know why we're not getting these emails when we're in uptrends about, something not working out with 5-minute rules of engagement or, just things like that. Why are we being aggressive? You have to expect to get stopped if you're counter trend trading. Because in essence, you're trying to pick a bottom. And that's why I say use your 5-minute rules of engagement, because then you're not picking a bottom. At least you have high odds to maybe scale. But you got to give it some wiggle room. Previous stays low. If you're looking to put on a swing trade and you don't have rules of engagement on the daily and you're using 5-minute rules of engagement, I would say at least give it to the previous day's low. And understand that sometimes that involves a lot of risk. Otherwise, just simply wait. Wait for price back above the 10 SMA on the daily. All right? Another reason not to be aggressive this week, the week before OPEX, we're in a downtrend in the China news. China, deal, no deal, deal, no deal, deal, no deal. Someone had emailed me the other day about something to do. I don't watch the TV. And once again, by all means, watch the TV. I don't. I used to. I'll be honest with you. I used to have that CNBC. I used to sleep with it on. And then I started to realize, it took me a long time, and I'm not bashing CNBC. CNBC, to me, is a good news channel, and if I'm going to flip something on, it's going to be that. I'm not bashing that, but all that is opinions. It's opinions. Sometimes the opinions are based on facts. Sometimes they're not based on anything. So if you're a trader, you don't need opinions. The only things are the facts. The facts is price on charts. Those are the facts. Can't erase those. Those are facts. That's what the market's doing or has done. All right? We can have a thesis based on historical chart pattern comparison, but we also know we make money in uptrends. So you don't need media. You don't need anything besides what you have in front of you every day, which is price. Price patterns, trend. They work. We know they work. I mean, the 88%, if that doesn't tell you they work, I don't know what could possibly tell you they work. So anyway, I know I like to preach at the beginning of these videos. Let's get that out of the way. 90% Club 104 different options. That's crazy. 104 different options that are up over 90% this year. 30 triplers. 1,047 different options up over 90% since we launched the service back in 2013. Crazy, crazy results, all on trading rules of engagement based on market trend. Okay. Every single historical chart pattern comparison that we've been able to capitalize on, and it's been a lot of them, right? That gives us a trading edge, rules of engagement with historical chart pattern comparisons. This is 1998. SPX, SPX. We had our death cross. I even tried to label them so it's crystal clear. Death cross 50 through the 200, death cross 50 through the 200 moving average. That was when I went all cash back in October, right? October actually is right here. We broke an uptrend line. And then things got ugly, okay? Things got ugly. Now, just dissecting this, we went into an uptrend here, right? And then we had a bull flag here and another bull flag here. This was this 40-day uptrend that just never ended and just kept paying us and paying us and paying us, right? And then we got a little shakeout here. And then guess what? We went to another uptrend, right? We got paid here. And then we had a shakeout. And then we went to another uptrend. I think this was a 22-day uptrend right in here. And now we're having another shakeout. Okay? So these areas, these shakeouts that I'll put a circle around, this is not when you make your money. Now, if you're buying dips using 5-minute rules of engagement, trying to get swing long versus the 50 moving average or a pivotal low, understand you're swimming upstream, you're counter trend trading, and it's more difficult. It's more difficult to have conviction because you know you're going to probably go red before you go green. Okay, getting back to this. The S&P did hold this 50 SMA for a while. Now it ended up breaking it after a few times and broke it intraday and closed below it and then came right back. And we found support. So this 50 SMA, I think I would say 2850 is really, really, really big support. I understand the 50 is above that right now. 2850 is going, that's where I have this box. Because I think, well, 2860, 2850, this 100 handle trading range, we could be into. We might break the bottom of it, intraday or even for a day and come back up. But I think for right now, the easiest money of the year is over because we're in a consolidation phase. That consolidation phase could last days, most likely weeks. Now, we already know, we've talked about this over and over again, where our lines in the sand are. I would say our first line in the sand is here, but this is really tight. So I would say the 200 SMA, 2775. And this one right here is probably pretty big, and I think this is on the daily update, 2722. Below 2722 is a very sloppy tape that could turn brutal, okay? Above this low, which is 2785, I still think is pretty bullish. If we get below the 50 SMA, I'm sort of neutral in here because I think it's just going to be sloppy. So we have our lines in the sand, our lines of defense. So if you're buying this dip, you got to give it some wiggle room. Bare minimum, if you're buying a dip, you have to use the previous day's low, or if you want to use a swing low. But understand, it's not easy. This is easy money right here, buying it and getting paid right away because you are in an uptrend. Right? You have momentum on your side. If you are buying a dip, you do not have momentum on your side, and you're sort of just buying blindly. And that's the reason why I say use the 5-minute rules of engagement. At least we have something in our corner. Okay, so let's change time frames. Let's look at the weekly real fast, our highest time frame, and see if it's telling us anything. Well, that green line is our 10 SMA in the weekly. And what is that? 2867. So we did hit that, which would be support. Going back to 1998, we hit that here, and it was support. And then when we're in that gray box area, let me see if I can delete this. Oops, delete this. Remove drawings. Right in here, we hit it, right? In fact, we broke into breaking it after hitting it so many times. So I think we look very similar still to 1998. That doesn't mean that we won't diverge. It means that we're going to continue to use that analog until it does diverge. Okay, so let's get to the daily and start looking at everything to see if we see any kind of trading edge we have here. NASDAQ. Now, to me, I posted that don't expect the NASDAQ to hit the 50 SMA because it was much stronger than the market. It is pulling back. It's not, it's still a ways from the 50 SMA. And I still would look for, if the market's going to squeeze, I would look for FAANG stocks to lead the way. The facts are, we have mixed signals right now. We're in a downtrend, or actually the NASDAQ is in a no trend. And let's look at this real fast just for clarity. Let me change these candles to bars. You can see we closed up here. You need a 2-day close. The second day's close will have to be below the low of that first day's close. So yesterday was actually the first closing bar. You have to close below yesterday's low to go in a downtrend on the NASDAQ. The S&P is different. And we can look at that later. But here's the facts. We're in a no trend, possibly going into a downtrend. MACD is weak. However, 200 SMA is heading up, the 50 SMA is heading up. So we have conflicting indicators. What are conflicting indicators added with the week before OPEC, added with the China news? If you add all that up, what does that equal? Sloppy trading. That's why you're not supposed to be aggressive right now, and that's why your number one priority is preserving those massive year-to-date gains in your capital. Okay, oil futures, they're not doing anything. We're seeing a golden cross. We're holding the golden cross. MACD's weak, so we can't just assume that golden cross is going to hold. We'll have to wait and see. XLE, the weakest out there. And yeah, this is the death cross. The golden cross never happened. And I think you test the 60, 61 area. So that does not look great. XLF, look at this big megaphone pattern we drew. We got to the top, we pulled right back down. So once you get to the middle or close to the middle, probably go grind and test those highs again. Right now, financials actually look pretty decent. IWM, trading range really for what? February, March, April, May. So at least 3-month trading range on the IWM. It's not leading, it's lagging, so we're not going to focus on it. IYT, very sloppy. I wouldn't touch it. IBB, bottom of the megaphone. I would expect some sort of rip back into the middle of the megaphone, but we'll wait and see. TLT, very strong. We talked about this trade that you bull flagged above a downtrend line with the MACD bull cross. It could take time. Your stop would be right here. And this one's paying and we're filling the gaps just like we thought on TLT bonds. So once again, I think we were long from in here down there. We've already had 1 or 2 different trades this year, TLT, that is in the 90% club. So right here, I just don't think it's a great new trade. All right, so let's flip to, I know I got the bars up, but I'm fine here. Apple. So this is some people call this an island reversal. You get up 1 or 2, 3 bars, then you gap down. Now you get this island, and we reversed off the island. So to me, I wouldn't look too much into that so-called island reversal. You have the golden cross right here, and I think what's going to happen, you'll come fill this gap, and you're going to consolidate more. And that's what I just think is going to happen. I think the easy money with Apple is over for right now until we digest some of these massive gains. Amazon's starting to see some mixed indicators. Netflix is still in that huge megaphone. Booking, Expedia, actually both those look very bearish. Tesla, broke those new lows, then just saw no price weakness confirmation. Google holding that critical moving average. Facebook coming back down, MACD bear cross. It actually looks like it might be setting up short. So we don't have a lot of leaders here. If this market is going to short squeeze, tech really doesn't look wonderful, to be honest with you. Nvidia, no. If anything, these stocks, a lot of these are setting up short. But they're also, some of them are getting near major supports. AMD, it's a nice bounce there. Avgo, OLED. Yeah, I mean, we're lacking some leadership. I mean, there's no go-to stock right here. Let's see, Microsoft. If anything, that looks like it's setting up short. But at the same token, we have so many mixed indicators, it wouldn't surprise me if you reverse in the middle of nowhere. Coop, that actually looks like it's setting up short. CRM, Workday. We don't see any leaders yet. Jobs, nothing looks like Jobs looks like a short. FF5E looks like a short. Team, that's the first one that looks good. I don't know when their earnings are. Check. That's the first one so far that looks good. Twitter, very sloppy. Roku, very sloppy. It looks okay. It does not look like a leader. I know Bob has earnings coming up. All of a sudden, that went from looking great to horrible. Baidu, that looks like it wants to test new lows. Cyber, not so much. And Panwa was actually a stock that just recently got stopped. It was our 19th stop of the year. Still batting 88%, but that one broke. And MACD is very sloppy, and this one might take more time to digest these massive gains we've had in the year with this one. Momo, that looks like I think it was on the short. Yeah, it was engaged short, I think, today. Momo, Shop, ICE, CME. CME looks okay. We talked about this death cross. We talked about it either doing a double bottom or creating a higher low, and it's exactly what it did. Blew through the death cross. It actually looks much better. I just don't know if it's going to be a momentum trade for us. Let's look at the rest of the banks here. JP Morgan, bear flagging. Let's see, even some of the huge leaders are not showing too much promise. PayPal, what about GoDaddy and Wix? I think Team was the only one. Wix still looks okay. So it's really hard to find, you can tell when the market's sloppy, or you can tell when it's going to go right back into an uptrend when you start to see leaderships in stocks. I don't see a ton of leadership on the downside. At the same token, I don't see a ton of leadership on the upside. So, we're going to get to stocks in a moment. The market's actually green right today. All this does is tell me that this trading range that we projected to like 1998 looks like a pretty good trading range because the market's sloppy. It doesn't look like we're going to break down or break out, but that doesn't mean there's not going to be some good trades. There's going to be some great 5-minute rules of engagement. Like we're just getting paid right now on, we just talked about, I know I'm flipping all around here, but the market's green, so I just wanted to show you something real fast. So if you're trading the ES, I think I posted long here, roughly. So you scaled, and so what? You took a little bit of heat. Look at the market's just paying you fat right now, really fat. So we talked about if you're going to put on the spiders SPXL, you're using the previous day's low. I was risking $2. I'm going to scale more, and then if I exercise these spider calls, I'm going to be up to 50. I'm already 20%, so I'll be 50% long spiders again. I think I'm 20% QQQ. So if these end up getting exercised at any point next week, I'm back up just like that, up to 70% market exposure, which I don't want to be 100 because I don't think we're breaking out. I'll probably be between 40 and 70 for the next few weeks, and I'll take selective trades. But, this was one that, someone had texted me. They were up early in the morning. They said, what was wrong with this trade right here? Nothing. You got to understand that you're swimming upstream. Week before OPEX, you got the China news, and you're in a downtrend. So this one didn't work. You engaged long, and we had your MACD bull cross. We came down and created new lows. Guess what happened? These new lows happened without MACD, so you had bullish divergence. So the next time around, this worked much better. I think I even pointed that out on Twitter that we saw the bullish divergence. And yeah, you might have taken a little heat again, but you didn't get stopped. If you took it here, you didn't get stopped. And if you took it here, you didn't get stopped. I wouldn't be chasing up here. Is this another trade of price strength confirmation? I would be scaling into this. All right. Okay, so let's see. Vertex. Let's flip back to biotech here and see what we got. Yeah, I don't see too many leaders. I think REGM was setting up short, and that one still does not look good. CMG looks okay. UBNT. Yeah, we just scanned about, 40 stocks, and I don't see too many leaders out there. IQ, DocuQ. Come on. Oh, let's see a Lyft. Lyft is going back. Lyft could be going back to new lows without MACD, which maybe it creates a pivotal low back down below 50, but this actually doesn't look good. Some people might say, well, is this a head, left shoulder, right shoulder? You don't know that pattern until you get back above here. This does not look good, and I think they have earnings, what is it, today or tomorrow or something like that. So, all right, so we've talked about a lot of things here. We've talked about historical chart pattern comparisons. We talked about uptrends, downtrends, the higher time frame, when we trade, when we don't trade, day trading versus swing trading. If you're going to buy the dips, give it a little bit more room, at least the previous day's low. We've talked about a lot in this video. The bottom line is we are still in a downtrend. Is there going to be opportunities in downtrends? Yes. Just define your risk. So if you're normally trading and risking 20 grand a day, risk 10. If you normally risk 10 grand a day, risk 5. If you risk 5, risk 2,500. Do the math. Just risk half of what you normally do if you're trading. Trade your 5-minute rules of engagement. Look to buy on this dip, but define your risk. Pull back the throttle on your size. To me, it's best to trade options because I'm not risking that much money, and I have huge leverage if I end up being right. That's how I trade. That's all I got for you in the market video update. Have a great day.